Okay, showing you the option 400, 0, 100 and $300.
Ma'am, 400.
Okay, any other guess? Dhanashri. So these are the expenses that is incurring while doing some charity donation.
0.
Okay. So 400 or 0? Like which should I pick? So while performing the services for the Red Cross at an out-of-town location for 3 weekends, the taxpayer incurred the following expenses in relation to these trips: special uniform and meals and logging expenses. So out of these expenses, which expense should be which expenses should be taken as an itemized deduction under charitable donation? So are you going with 400 or 0? Like if I have to pick one.
Ma'am, both will be deductible, right? So 400.
Okay.
Let's go with 400.
Okay. So let's go with the $400. Yes. So both of you are correct. So both of the items are basically in both of these expenses are incurred while doing the charity work. So that means you can deduct these as in charitable contributions. Okay. Next question. What percentage of a self-employed person's medical insurance premium is deductible above the line? So if you are a self-employed person and you are taking certain medical insurance for you, so how much of premium you can deduct in your form 1040?
Ma'am, what is the fourth option?
Okay. 70%.
Zero.
Okay. Any other guess?
Ma'am, 100%.
Okay. So for a self-employed person, he can take he can get all the deduction, 100% of deduction when if he is paying any like medical insurance or if he has any like life insurance for him. Okay, if it was asking for self-employment taxes, then he can get the 50% of deduction. Okay, is it clear? Like if you are a self-employed person and your business has net profit, you can deduct 100% of your medical, health, and qualified long-term care insurance premium for yourself, your spouse, as well as dependent. Okay, so basically, self-employed person itself, himself, or his or her spouse, and dependent is also covered for this deduction. Any doubt?
No, got it.
Okay, next question. On January 2, year 1, the Phillips paid 50,000 cash and obtained 200,000 mortgage to purchase a home. In year 3, they borrowed $15,000 secured by their home and used the cash to add a new room to their residence. That the same year they took a $5,000 of auto loan. So basically, they are purchasing certain home and paying 50,000 cash and 200,000 of mortgage on this loan. Mortgage on this home. In year 3, they borrowed $15,000 secured by their home, like they are using the home as a collateral and borrowing $15,000 more and using it to add a new room to their residence, means using this mortgage to do some improvement or do add some room to their residence. Then they took $5,000 of auto loan. So interest are given, basically 17,000 is paying on mortgage interest, then 1,500 on room construction loan and 500 on auto loan interest. So how much interest you can take as an itemized deduction?
Can you show the option?
Only 17,000.
Okay, any other guess? Okay, should I explain or any other guess?
19,000.
Okay. Okay, so you have first of all your mortgage interest, mortgage loan. So mortgage loan or mortgage interest, mortgage interest can be taken as itemized deduction. It is confirmed. So that means 17,000 amount you can definitely deduct in your 1040. Next thing, automobile loan. Since this is a personal loan, so personal loans, interest on these personal loans are not allowed. So that means 5,000 or $500 of interest is not allowed. It is also confirmed. Okay. So that means your 17,000 is confirmed and 500 is like definitely not allowed. Next thing, interest on room construction loan. So since you are taking this loan to do certain improvement to your house, so that means this is allowed. So 1,500 can be taken as itemized deduction. So if you add 17,000 and 1,500, it will give you 18,500 as your itemized deduction. Any doubt? Should I explain it again or is it
Yes,
clear?
please.
Clear, ma'am.
Can you explain it again?
Yeah. Okay. So if you read the interest expenses which are deductible that is given in your book, it is like given that if you are taking any mortgage loan, and that loan you are using to buy your principal residence or you are using it to improve your residence, then interest on this loan is allowed as itemized deduction. Okay. But if you are using this loan to buy certain other things, like you are buying certain personal property, so that will be not allowed. Okay. So since you are using this both the loans to purchase your home and second to improve your home, so that means this interest can be taken as itemized deduction. But whereas automobile loan is a personal loan, so this loan is definitely not allowed to take as deduction in your 1040. Personal auto loan, any other personal loan, credit card loan, so these loans are not allowed. So that means your answer will be 18,500. Is it clear now?
Yes, got it.
Okay, next question. Smith is a member of US Armed Forces and is assigned to service in Iraq for a period that begins on January 20 of the current year and ends on May 5 of current year. So how many months of military pay may Smith exclude from gross income for the current year? So he is getting the military pay. So what should be included in the gross income? Sorry, how many months of, yes, military pay can be excluded from gross income? Okay. Skip this question because it is not in your syllabus, I think, this topic. Otherwise, its answer will be 5. It is not given in your book, so I am skipping this question. Okay, so let's do this one. Mike and Jane Lewis, a married couple, file a joint federal income tax return. They have one child who is of age 15, whom they support 100%. So both are under the age of 65. They have the following income and expenses for the year. Mike's wages 65,000, Jane's wages 60,000. Total allowable itemized deduction of 13,000. Mike's contribution to an IRA 4,000. Jane's contribution to an IRA of 4,000. Mike is not covered by pension plan at work, while Jane is covered by a plan at her employer. So assume that the standard amount for married filing jointly is 24,000 and the IRA contribution limit is $120,000. So what is the Lewis's taxable income amount? Okay, so read it once. Okay. So, are you able to understand this question? Because it is more related to your TCP section. So, if you have not any, like, if you are not getting any idea, then no problem. We can skip this question because it is more related to your TCP. You have to include this IRA contribution limit, then some phase out limit.
Ma'am, 97,000.
Okay. Yes, it is correct. 96, 97 or 96 400, because 97 is not an option.
96 400.
Okay. So are you able to do this question? Like, got the concept? No, it is incorrect. Okay. Okay, so let's solve this question. So you have basically given the wages of two couple, 65 and 60,000, means their combined wages or income will be 125,000. Here your itemized deductions are given 13,000 and 24,000. So first of all, you will take your above the line deduction. So you can get the above the line deduction if you are making any contribution to the IRA. Okay. So since like maximum you can deduct 7,000 of contribution, but in case if one of the like spouse or both of the spouse are covered by some employer related plan, like they already have their pension plan that is provided by their employer, and still they are taking some additional plan, then in that case they have to subject to certain phase out limit to get the contribution deduction. Okay. So here like your contribution limit is given 120,000. Since their AGI, that is 125,000, is exceeding this limit, so that means they do not get any deduction for this IRA. Okay.
Yes, ma'am.
Okay. So their adjusted gross income will be $125,000. And next, like you can take either standard deduction or itemized deduction, which is more beneficial for you. So since your standard deduction is more than your itemized deduction, that means you will take your standard deduction. Okay, so after deducting your standard deduction, you will get your taxable income of $101,000.
1,01,000.
Yes. Okay, so can we proceed now?
Understood, ma'am.
A painter and an accountant agree to trade their services. The painter provides services valued at $550 and the accountant provides services for $500. So what amount the accountant report as income or expense? So here the painter is providing services of 550 and accountant is providing the services of $500. So they are exchanging their services and you have to tell that what should be the accountant income in this case, income or expense.
Ma'am, 500.
Okay. Any other? Well,
550.
okay. Okay, so if you are getting like any cash or any other like property or any services in exchange for your like goods or services, then it will be recorded at the fair market value. So here the accountant is providing for $500, but he is getting the services of $550. So that means the income for him will be 550, whereas the expense for him is of $500. Okay, so which option is like given? $500 of income or $550 of income or $500 of expense. So you have an option of $550 of income here. So are you getting my point? Like whatever you cash will be recorded at its value, but if you are getting something other than cash, it will be recorded at fair market value. So as an accountant, you are getting like painter services in exchange for your services. So that means whatever you are getting, it will be considered as your income at fair market value. And whatever you are providing, it will be an expense for you. Is it clear? So $550 should be your income for accountant. Is it clear or any doubt?
Ma'am, can you explain again?
Okay. So like suppose you are providing some goods, you are selling some goods, or you are providing some services. So if you are getting the cash in exchange for these services, it will be recorded at its value. But if you are getting something other than cash, like if you are getting the property in exchange for your services, or if you are getting the services in exchange of your services, means barter system is there. So in that case, you will record at fair market value whatever you are receiving. So here the accountant is receiving the services in exchange of services. So the services he is getting is of $550. So it will be a income for him. Is it clear?
Okay, ma'am.
Okay. So next question. Mary's spouse died in 2010. Her 10-year-old son Bob is her dependent and has lived in her house since his birth. So, what is the Mary's filing status in 2013 if she has not remarried? So, her spouse died during the 2010. Okay, so if you consider it year zero, so his spouse died during year zero, and she has a 10-year-old son as a dependent. Okay, so you have to tell the filing status for 2013 means for year 3, year 0, then year 1, 3. So you have to tell the filing status for year 3.
Qualifying surviving spouse.
Are you sure? It is asking for year 3, not year 1 or year 2.
Ma'am, head of household.
Okay, sure. Can we go with head of household or any other guess? Okay, so head of household is correct answer. So for the current year, like for the same year in which the spouse died, he or she can take the married filing jointly as filing status. For next 2 years, if he or she has dependent, then he can take the qualifying surviving spouse as the filing status. But after the 2 years, if he or she has dependent, he can take head of household as the most beneficial filing status. Okay, so if in this case, if the spouse do if in this case the taxpayer do not have any dependent, then the filing status will be single for the next year. Okay, are you getting my point or any doubt?
No, no, got it.
Okay, next. The spouse of a married taxpayer died on January 15, year 1. The taxpayer qualifying child moved to live with the grandparent in their home on August 30, year 2. If the taxpayer did not remarry before the end of year 2, then which filing status should the taxpayer choose for year 2?
Ma'am, surviving spouse.
Okay. So here the spouse died during year one. The taxpayer's qualifying child moved to live with grandparent on August 30, year two. So she has not remarried before the end of year two, then filing status for year two. Okay, so for the same year, she can take the married filing jointly as filing status, but for next year, if she has dependent who is living with her for the whole year, then she can take the qualifying surviving spouse. But here, the dependent is not living for the whole year. He is living with grandparent on from August 30 to like year end. So that means the whole year condition here is not satisfied. So what will you think? What should be the filing status now? Head of household or any other thing? Surviving spouse, married, filing jointly.
Surviving spouse.
But for surviving spouse, condition should be there that like the dependent should live with the taxpayer for the whole year. So here the like for year two, the dependent is not living for the whole year. So he is shifting to the grandparents' home on August 30. So that means surviving spouse is not the correct answer. I think other options are also eliminated because if you think married filing separately, she can't file because she is not married at the end of year two. Like, are you getting this point? Qualifying surviving spouse is not the correct because whole year condition is not satisfying. Next, married filing jointly is also cannot be taken because she is not married at the end of year two. Her spouse died during the year one. So that means you are left with only head of household option. Are you getting or my point or any doubt? Is there any doubt?
No, ma'am, got it now.
Okay, so head of household should be the correct answer. So for head of household, the dependent can live with the taxpayer for more than more than half of the year. So here the condition is satisfying. Okay, so let's do this question now. Rich is a cash basis self-employed air conditioning repairman with gross business receipt of 20,000. So it means your self-employment income is $20,000 and rich cash disbursement were as follows. So these are some of the expenses. So you have to tell the net self-employment income. So that means you have to basically deduct these expenses from this income. So which expenses should be deductible?
Can you show the options?
Yeah, sure.
Ma'am, the last option.
Okay. Any other guess? Dhanashree, if you can want to answer something else, then
Last question.
sorry.
The last one.
Okay, so both of you are going with this option. Okay. So here your business income is $20,000. So from this income, you have to deduct these expenses. So please tell first expenses related to air conditioning part. So is it deductible or non-deductible?
Deductible related to the
Yes, it is deductible. Okay, next yellow pages listing.
deductible.
Okay. Yes. So estimated federal income taxes you are paying on self-employment income. So you are paying self-employment taxes of $1,000.
Not deductible.
Yes, non-deductible. Next, business long distance telephone calls. So
Deductible.
Deductible.
charitable contribution of $200.
Not deductible.
Is it is deductible, but for charitable contribution you can take as itemized deduction. Okay, not self-employment expenses. Okay, so if you calculate, it will give you this amount. Have you calculated this? 20,000
Ma'am.
subtracting these expenses. Okay.
15,100.
Okay, so let's check. Okay, it is correct. So you have your deductible expenses of air conditioning 2,500, yellow pages listing of 2,000, and business long term calls of $400. Whereas your charitable contribution and federal income taxes are not allowed. Okay, so let's do next question. Wages paid for domestic services are subject to special rules for determining whether they are subject to payroll taxes. So, what are the domestic wages subject to federal income tax with tax withholding?
Only if requested by the employee.
Okay. Any other guess, or should I submit this one? So basically, your domestic services are those services which you are like doing domestically, means you are doing some for private homes like cleaning, cooking, and all. So in this case, like if you are subject to certain payroll taxes, then when are these domestic wages subject to tax in federal income tax withholding? If it is requested by your employee, means if employee is agreed, then only can take withhold their taxes, or like there should be certain wages limitation, like over $1,000 of wages, over $2,000, or over $1,500 of wage. Okay, so are you going with option A all?
Yes.
Okay, it is correct. So this withholding federal income taxes for household employee is required only if requested by the employee and agreed to by the employer. So such withholding should be reported on your Schedule H and filed with IRS Form 1040. Okay, so domestic services basically which you are performing in, like for some private homes, like doing some cleaning kind of thing, you are performing certain cooking, or washing the car. So these kind of services if you are performing, and like this you are getting the wages in return for these services, then these wages are subject to payroll taxes, but these payroll taxes can only be withheld by your employer only if you are like requesting to your employer. Okay, any doubt in these questions? Any doubt?
No, no.
Okay. Okay, so quickly we will do one simulation. Okay, it will require some time, so let's do the next one first. Okay. So this is related to a provision of IRC was created under Tax Cuts and Job Act of 2017, which permits the owner of sole proprietor as corporation or partnership to deduct 20% of their income earned by the business. The simulation is designed to test your knowledge of new sections, so it is basically related to your qualified business income deduction. So if you have any idea, then we can do this. Otherwise, let's go for second one, third one. So have the understanding of this qualified business income deduction? Okay, let's do the next one because it is not an important topic. So Okay. So let's try to solve this simulation. Chloe incurred $500 in business expenses that were reimbursed at the company rate of 80%. So assume that Chloe sufficient substantiation for the expenses, then he should. So here you have been given the business expenses of $500 that are reimbursed at the company rate of 80%. So basically this $500 is basically reimbursed by the company up to the 80%. Then what should like Chloe do with this basically $500, whether he should include, whether he can deduct the unreimbursed expenses in his 1040, or like should include this $500 as gross income, or nothing should be reported or deduct the unreimbursed expenses of $100.
Nothing should be done.
Sorry, can you repeat your answer, please?
Option D, nothing should be done.
Okay. And Shravani, what about you? If you
Ma'am, are there any options?
okay.
Third option.
Okay. So basically, you are incurring $500 of expenses, but 80% of these expenses are reimbursed by your company. So what should do you can do with these expenses? So since your 80% is reimbursed by the company, means $400 is reimbursed by company, and you have only $100 of unreimbursed business expenses. So if you want to like confirm any of the following, or you want to change your answer, so giving you the hint, like $500 cannot be included in gross income full amount, because 80% is reimbursed by company and 100% you are still have unreimbursed expenses. Second thing, if you have unreimbursed expenses, can you deduct these unreimbursed expenses, like your business expenses, in your form 1040? Next thing, state ki, you can deduct $500 of expenses in business expenses. So it is obviously incorrect, because since you are getting the reimbursement for $400, so why did you like again deduct these expenses? Next is nothing should be reported on tax return. So if you have to pick one now, what should be your answer? So out of A, B, C, D, which should I pick?
I will stick to option B.
Which one?
D, D.
D. Okay. So going with the D option. Next is your Dara incurred $6,000 in job related moving expenses and was reimbursed 5,000. So here you have $6,000 of moving expenses and 5,000 is reimbursed by your company. So you should, as a taxpayer, you should include this 5,000 in your gross income, $1,000 as miscellaneous deduction, 5,000 in gross income, and 6,000 as business expense, or nothing should be reported here. So you have moving expenses of 6,000 and you're getting the reimbursement for 5,000. So what should be your guess?
Again, option D.
Option B,
On D, D.
D. Okay. Okay, so your moving expenses, basically unreimbursed moving expenses is not allowed as a deduction. Next is, uh, okay, we will do two more, then we will submit. Next is your Pola paid Fred $10,000 in alimony and 15,000 in child support as their divorce settlement that is signed on 2024. So look for this year. Which of the following is correct? So $10,000 is alimony and $15,000 is child support. So she can deduct, sorry, he can deduct 10,000 in alimony and $15,000, half of the 15,000 in child support, or 25,000 should be included as income by the recipient, or $0 on the tax return, or 10,000 alimony can be taken as deduction. So what should be the right answer here?
C.
Okay. So John suffered 14,000 of dollar of casualty loss from a hail damage to his personal residence roof. Insurance reimbursement was 5,000 and John's adjusted gross income was $50,000. So here the taxpayer has $14,000 of casualty loss from the hail damage to personal roof. And for this 14,000, he is getting the reimbursement of $5,000. So that means the net loss is $9,000 that is unreimbursed. So here AGI is given $50,000. So John should can deduct $9,000 of losses, $8,900 of losses, $3,900 of losses, or $0 of losses. So he is getting the casualty losses from the hail damage to his personal residence.
Ma'am, deduct 0.
Okay. Any other guess?
9,000 deductible.
9,000. Okay. So basically 9,000 is obviously the wrong answer, because if you have like unreimbursed casualty losses, then first of all you have to deduct $100 from each of the loss event. Then it will be subjected to 10% of AGI limit. Okay. So next thing is that you can only take the deduction for the losses only if it is occurring from federally declared disaster. So here nothing is given related to federally declared disaster. So that means this is a casualty loss and it will not be allowed as deduction. Okay. So if you want, I can extend the class to do this question, but if you want to continue tomorrow, then we can continue this question tomorrow. So what you say?
Ma'am, we can finish then and continue with the new
Okay.
questions tomorrow.
Okay, no issue. So next is your Vincent incurred 13,000 in salt taxes due to purchase of two automobiles. So you have $13,000 of taxes. So how much he can deduct salt taxes?
Ten thousand.
Okay. Any other guess? So yes, for the salt taxes, you can take up to $10,000 of deduction in your form 1040 as an itemized deduction. Okay. Next is your Trent won the lottery and purchased a 1 million estate on the top of a mountain with a mortgage of 935,500 mortgage interest expense related to this purchase for the current year was $65,625. So what amount can Trent deduct on his tax return? So here you basically won the lottery and purchased a 1 million estate on the top of mountain with a mortgage of this amount. So you have mortgage interest expense. So what amount you can take as deduction in your form 1040?
Zero.
Okay, any other guess?
Last option.
Okay. So which should I pick now? Like if you So how will you arrive to this number 65,625? So you are taking the whole interest expense as a deduction. And actually you are saying that nothing should be deducted. Okay. So which should I pick now? 0 or 65,625? Because one should be picked to submit.
Take 10, you know, we will anyway. Thank you.
This one, D option.
Yeah, yeah.
Okay. So next question, Cox CPA makes a contribution of 15,000 to a state university in exchange for the right to purchase the football season ticket, which will be distributed to the client. So under the TCGA, the uh, uh, can claim 15,000 charitable deduction, 80% of post-test charitable, 60% or cannot claim the charitable deduction. So he is basically making the contribution of 15,000, and in exchange he is getting the right to purchase football season ticket, which will be distributed to the client. So contribution of 15,000, and in exchange he is getting the ticket of football season.
Cannot claim a charitable deduction.
Okay, any other guess? Okay, so let's pick. You are not. You will not take any charitable deduction because you are getting the tickets in return for this contribution. So that means your net contribution will become zero. Next is in 2025, Lauren had a net operating loss of 6,000. So what should he do with this net operating loss? He should deduct the 6,000 and carry forward 20 years only. 80% carry forward indefinitely, or 2-year carry back, or 20-year carry forward. So it is related to your NOL, and you have to look this year basically 2025. So in the current year you have an net operating losses of 6,000. So you should carry forward it to 20-year or carry back also, or like you can deduct the whole amount or 80%. So what should be the right answer?
Carry the 6,000 forward 20 years only.
Okay, so that means you are saying that you can only carry forward this loss and can deduct the whole amount, like 100% of this amount. There should be no limitation. Okay, so anything you want to change here, or should I submit now?
Submit.
Okay, so 62% of your answers are correct here. Okay, so first one is correct, that you can deduct, sorry, you cannot deduct your unreimbursed business expenses in your 1040. Second is your unreimbursed moving expenses. So if you have unreimbursed moving expenses, then this deduction classified as miscellaneous itemized deduction subject to 2% of AGI. Sorry. You should include $5,000 in your gross income. Okay. So if you are getting any reimbursement for your moving expenses, then it will be considered as taxable income for you. But if you are a army worker, then in that case you will be excluded from including this income in your 1040. Okay, so second answer should be that you have to include this reimbursement as your gross income. Next, third one is your correct. Like you do not have to include any alimony or child support payment in your return if your if the divorce is settled after the 2018. But if it is before 2018, then alimony can be considered as an income for the recipient and can be taken as deduction for the payer. Fourth one is also correct since there is no federally declared disaster, so that means you cannot take any deduction for the casualty losses. For sole taxes, you have $10,000 of limitation, means you can only take deduction up to the $10,000 and rest of the taxes you cannot take the deduction above this amount. Okay. Next is your related to mortgage. So it is incorrect. Your correct answer should be $52,500. So basically, what is done here that the TCGA generally allow an interest deduction up to the $750,000 of mortgage. So basically, what you are doing, since you only take the deduction up to $750,000, so that means you are basically bifurcating this amount and including the portion of these interest that is related to $750,000 of mortgage. So you are basically proportionating these interest expenses. Okay. So how much portion will be related to $750,000 of mortgage? So if you will calculate, it will comes to $52,500. Is it clear how this is calculated?
Yes, ma'am.
Okay, so next question, next is your correct that you cannot take any charitable deduction because you are getting the same like in return. So you can take the charitable deduction only for the amount which is left after deducting all the benefit you are getting in return. So here like you are getting the ticket and the amount is not given, so that means the amount should be equivalent to your contribution. So here your net contribution will become zero and you cannot take any deduction. Next is your net operating losses of $6,000. Okay, so your right answer will be here carry forward indefinitely, but it will be subjected to 80% of taxable income limitation. So your after 2020, the TCGA rules state that you can only deduct your losses up to the percentage of 80% in the current year. So you have to include the 80% rule also here and carry forward to the 20 years. Carry forward indefinitely, not 20 years. Any doubt in this simulation?
No.
Okay. So should we wrap up now? Any doubt? Shravani?
Yes, ma'am.
Okay, so we will discuss some more questions tomorrow. Thank you for
Okay.
joining. Okay.
Thank you.
Thank you,
Bye.
ma'am. Bye, ma'am.
Okay, bye.